Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Mathew. After the most recent changes to the tax laws, income up to 12 lakh rupees in the new tax regime is completely tax-free. But irrespective of how much you earn in one particular profession, that income is completely tax-free. What exactly am I talking about? I'm talking about a farmer's income. And of course, there's a lot of curiosity about it. How do you get designated as a farmer? What sort of income gets designated as a farmer's income? And can you qualify to be a farmer if you're not one right now? We'll try and answer all of those questions. The person who's got the answers is joining me now. Sarthak Ahuja, who is investment banker and educator, is joining me today. Sarthak, thanks so much for taking the time.
Thanks for having me, Alex.
So the first question, of course, is everybody who's not a farmer wants to be a farmer because the grass is always greener. Forgive the pun. But having said that, what is required for you to be classified as a farmer and for your income to be classified as a farmer's income?
So the beauty of the Indian laws is that as per the Income Tax Act, for you to actually have agricultural income, it's just you need to have agricultural produce that you're selling, which grows on the land. And there is no limit on how much you can really grow, which is really the definition. But apart from that, if you look at different state laws and state subjects, different states also have a requirement of maybe having an agriculturist's certificate for you to really classify as a farmer. For example, I do know that the state of Maharashtra has that requirement. Now, the big question is, will the income tax department, if your case comes up for scrutiny, actually verify all those documents? And in a lot of cases, even the income tax department official or the officer who's actually evaluating your case is not aware of all things. So purely from a definition perspective, because each state's requirements are different, the tax department may not know. But as long as you grow agricultural produce and you sell it, well, it's agricultural income.
Okay, so then that throws up a whole host of other questions, Sarthak. Because technically, if I have a hydroponic garden or if I have a decent enough space in my backyard to grow, say, string beans or carrots or cabbages, I could sell that and that could constitute farm income. Is that correct?
Well, it could. And a lot of people have actually used such vague definitions to justify their income as agricultural. However, what's very important to note is that because the government has come out with the Income Tax Bill 2025, they're actually ironing out a lot of these things which people would earlier take the advantage of to save taxes. For example, now they're saying for you to have agricultural income, it's important that you have agricultural land on which you're actually growing this produce, which should be in a rural area. It should not fall in an urban area. So suddenly, all the farmhouses in Delhi where people were doing this would now, once the bill is passed, would possibly not classify as agricultural income. Also, the law clearly specifies that you need to essentially just make your produce enough value add on it or process it just enough so that it's marketable. You can't add brands on your produce, or the moment you start processing it to say, okay, I'm going to use my potatoes, turn them into chips, I'm still an agriculturist. Well, it doesn't work like that. And also, very important to know that now the income tax department is also smart enough where they actually use data available on Google Maps and Street View to actually evaluate where you have the agricultural land and is it all a residential property, you've built a beautiful farmhouse for yourself, or you're practically actually growing any crops on it.
That's an important point. But so then once this new bill becomes an act, as you've pointed out, quite a few of the loopholes that are currently being utilized will go away. So then you would have to revert to the traditional definition, which is that you need to have agricultural land. In certain cases, like in the case of Maharashtra, you need to be designated as a farmer. How do you do that? If there is that requirement, Sarthak, are you aware of the process for you to be designated as a farmer?
Well, I'm not aware of the process, but what I think I can possibly say from a great deal of just experience dealing with bureaucracy in India is essentially because these things are more state subjects and they're not centralized. They're not, a lot of them are actually not digitized, so to say, as of now. A lot of the process of doing it actually happens when you purchase an agricultural land. And typically, if there is a broker through which you're purchasing a farmhouse, a lot of times the brokers would actually take care of the requirement of passing on even the agriculturist certificate along with the purchase documents of the land, and they would possibly go to the local registrar and get it stamped and say, now you're an agriculturist because you have a piece of agricultural land in a rural area and there has been some historical evidence of some crops growing there. I
Okay.
think that would be pretty much all.
Okay, okay. So, to the first answer that you gave me, in terms of what you need for it to be constituted as agricultural income, essentially you have to have produce of some form. You cannot have value added it too much, and so therefore we're talking about maybe mangoes or maybe avocados, and you sell it maybe at a farmer's market. So that would constitute agricultural income.
It
But
would.
what kind of proof would you require for that sale to have taken place? Because a lot of this income could well come in the form of cash.
Absolutely. So, you know, the income tax department would typically say that if you're making a sale of in certain categories of more than 20,000 rupees, or in certain cases more than 2,000 rupees, you should ideally not be selling to a person. So, the requirement says that essentially if a person collects more than 10,000 rupees in cash from one person on a particular day in terms of sale, you need to have their PAN number. Or, a lot of times businesses have this condition in the income tax law again, saying that for a business to be able to expense something off, they cannot make a cash expense of more than 10,000 rupees, a cash payment in one day. So, these definitions or these practical realities actually come from a complex web and combination of different clauses in the law. But what happens in terms of agricultural produce sale is that you can always say, a passerby just came by and asked for something worth 1,500 rupees and I sold it. And there were hundreds of such people who came and I collected a lot of cash and I actually deposited it into my bank account and I showed it as agricultural produce. Now, what would the tax department want in terms of proof? Could ideally be they would want not just your documents of the agricultural land, they would also try and evaluate what crop did you sell. So through interrogation, they can ask you what was the material, what was the crop that you actually sold. They would try and evaluate for that piece and area of land. What is the yield that you would typically get in that state or with that soil type? Then you would have some receipts of having paid for some minor electricity or water utility bill. If you would have, say, a tube well in your farm, which is quite a common practice in most places, that you would have legitimate agricultural land. So, just proofs around these things can actually be put together to evaluate. And of course, in addition to it, just a street view of where your agricultural land is a big proof that people tend to forget these days.
Yeah, and that would essentially contribute to my next question, and I just want to clarify that part. We have a lot of middlemen in India when it comes to the sale of agricultural produce, so you could effectively buy from your neighbor who is a farmer and you could go to a market and you could sell that produce, or you could go to an APMC and sell that produce and claim, hey, you know what, I got these from my farm. Uh, Obviously you would have to have land yourself, so that's the first tick box. But then what is the treatment of that income that you get when you're a merchant who is effectively selling agricultural produce?
Well, that is taxed as per typical tax slabs. So that would constitute more as business income because you're not really an agriculturist, you're actually a trader and you're a trader in agricultural commodities. So any kind of value add you do above and beyond that, which includes trading, or say a farmer would say, I've got these strawberries that I grew, but now I want to turn it into jam. And when I sell that jam at a farmer's market, well, it's not really sale from agricultural produce and it would constitute as a business income, which is taxed. What used to happen historically is a lot of farmers would also have cattle at their farms. They might have a couple of hens or a few at their farms, which would give X. So there is also income from poultry. There's also income from, say, sale of dairy products. However, now with the new tax bill, they've actually clarified and saying dairy, poultry would be excluded from agricultural income, because what they've realized is a lot of companies who've actually set up big poultry farms, highly mechanized machines, capital expense. you can't really call it agricultural income. So I think these things are getting ironed out now.
Okay. Now, do you absolutely have to own the land, or can you lease the land? Because that's another doubt that I have. If you, for example, I can pay rent to somebody that owns land, and I can grow crops, and I can sell it. That's still farming. That's still agricultural produce. What's the treatment of that?
I think if you genuinely practically think about it, there are so many farmers in India who actually don't own their own land, and they're actually paying rent to landlords who could be sitting elsewhere or not doing farming, doing some other business. Which is why even if you do farming on a rented piece of land, well, that constitutes as farming. People can definitely pull out certain case laws to say, well, it's not justified as farming. But to be fair, the case laws in a lot of cases, in a lot of states, as well as judgments from the tax courts, would justify that you can do farming on a leased piece of land as long as that leased piece of land is agricultural, it's outside the municipal limits of any urban city. I don't see any harm in you doing it. In fact, even renting out of agricultural land would fall into the definition. The rent that you get would fall into the definition of, agricultural income. How the new tax bill would now classify it? Would they say that this is rental income? Time will tell. As of now, rental incomes from agricultural land are also agricultural incomes.
But so then, what if I rent as an owner of a large agricultural piece of land? What if I rent it to another business, say a solar farm or a wind farm? Would that still, under the current
Absolutely
case?
not.
No, okay.
Absolutely not. I think we have to go by the spirit of why the government actually, wrote the law in a particular way. And of course, it's to, India is an agrarian economy, majorly. So it's the law has been drafted to give certain benefits to these poor farmers. Of course, people have found very creative ways to use it, but I think people also underestimate the amount of access to digital resources and IT infrastructure that the income tax department has in terms of legitimately verifying whether the claim that you're making is true or not.
Yeah, and I'm glad that you're stressing that point. A couple of last questions. One, uh, what if I'm an ambitious individual and I decide to rent a farm while I'm also earning another income? Say I'm on a contract somewhere, or I'm earning a salary. Do I have to make a clear distinction between the two, and do I have to, when I'm filing my taxes, use separate forms when I'm filing my tax returns?
Great question. So a lot of people who are actually running businesses, professions in urban areas, they tend to have some kind of agricultural land, if they come from some villages, and it could be ancestral land that they own, which what they've done is they've either leased out or they've put someone to maintain the piece of land, grow something there. I know a lot of people in metro cities of India who actually own farmland somewhere in satellite areas, surrounding areas of the city. And while they have a residential area there, a part of the farmland is also used to grow crops. A lot of people today want organic vegetables, they want organic produce, and a number of such people actually use it. Now, of course, the consumption that they would have for their own homes may just be about 10-20% of what they grow. The remaining 70-80% a lot of times is actually legitimately sold. Some people have made a business out of saying that I have a farm where I grow organic vegetables. I'm going to use some, I'm going to sell some to neighbors in the metro city, in the heart of which where I live, and I make money from it and I'll deposit it into my bank account, and you can legitimately show it as agricultural income. So in terms of forms, it's the same form that you would pick. You would mention your business income or professional income, you would mention your agricultural income. Now, the catch here is that while Section 10 of the Income Tax Act says that agricultural income is tax free, however, it's not as simple as that, because to calculate the tax slab that would apply onto you, you would take your agricultural income plus you would take all other incomes, which could be your capital gains, your business, your salary, and you total all of that to actually calculate what is your effective tax rate as per your tax slab. And then you apply that tax slab to your non-agricultural income. So if someone were to say, I have 5 lakhs of income from salary, but I have 30 lakhs of agricultural income, where the tax rate would apply on that 5 lakh, it would not be exempt, saying that I'm taking the benefit of the tax slab exemption limits, it would actually be as if you're earning 35 lakhs of income in total.
Wow. Okay. And that's not going to change with the new tax bill either?
I wouldn't think so, but I'm yet to check on that.
That's an interesting clarification. So therefore, if you want to get into farming, get into it whole hog and maybe not continue to do whatever you're doing because you're going to pay a lot of tax otherwise.
But what I must add, though, is I think the government is definitely considering putting certain exemption limits onto agricultural income as well. For example, any agricultural income above 10 lakh rupees would show that you are either a farmer of enough wealth or you're generating enough money to be able to sustain your family, and beyond that could be taxable. So that is something which is definitely on the horizon and we should expect.
Yeah, certainly. Well, let's admit it's a political issue, and there are a lot of farmers like that, and it's not the easiest nut to crack. But Sarthak, thanks so much for joining me today. It's been an insightful conversation. Pleasure having you.
Thank you.